A huge beer deal goes flat. Let's talk to Conway G. Gittins here, Reuters reporter. All right, Conway. Constellation Brands was going to be the distributor of Corona. That's not going to happen anymore. The shares plummeted about more than 20%. They stopped trading. They're down about 18% now. This is a complicated deal involving a lot of partners here. Talk us through this.
Yeah, you know, we think of Budweiser as the king of beers, but it's actually InBev, because InBev bought Anheuser-Busch in 2008, and that combined entity now wanted to go after Modelo, which owns Corona, which is a very popular brand. Now, in order to get...
I've had a couple of those.
Yeah. Now, and if you live in my neighborhood, you had a lot of them. And in order to get the deal done, or try to get the deal done, they made this deal to try to spin off the stake in Modelo to Constellation Brands in order to get the deal done. But the Justice Department says, wait a minute, AB InBev, you own like half of the beer market here in the U.S. If we give you Corona, hey, guess what? You'll be able to monopolize the beer market here, raise prices, and so the Justice Department doesn't want that to happen.
So this was going to be a more than $20 billion deal if this went through.
Yeah, more than $20 billion deal, but AB InBev says that the lawsuit is inconsistent with the facts and the reality of the marketplace. Constellation Brands says that basically it thinks that something is going to get done, maybe not the deal that it hoped.
All right, I guess so, because right now the stock's taking a beating on this would-be deal that went south. All right, Conway, we're going to come back to you in just a bit. I'm going to walk to the hot spot where I'm joined by Ernie Scheider. And remember those snaps, folks, at the bottom of the screen. Ernie, we're going to talk some earnings here with Dow Chemical, of course, the largest U.S. chemical maker. Fourth quarter profit missed. Demand in China and Europe seems to be the problem here.
Yes, four key areas that are really, really weak for Dow Chemical right now: electronics, coatings, polyurethanes, and chlorine. You know, four popular topics you love to talk about.
Not just swimming pools.
Exactly. And especially with chlorine. Dow is the world's largest producer of chlorine, but it also goes into things like vinyl housing. You know, it's a key component there for PVC. Demand is really, really weak right now. The earnings call just got finished earlier this morning. CEO Andrew Liveris sought to really reassure Wall Street and tell them that regardless of where the macro picture goes, that Dow has what he calls cost levers in place. Basically, that means that Dow Chemical is going to continue to lay off people and continue to control costs if things get worse.
Right. They're also taking, a $900 million plus write-down in this quarter?
Yes. Partly that's related to layoffs they announced in October, and also they wrote down the value of their lithium-ion battery business. Not good for green cars.
It's going to make, they got a grant from the Obama administration, but those electric cars are not so much on the roads.
Right.
All right, let's move on to Time Warner Cable. This is another story yet of more people going mobile because they're just not ramping up on their internet users.
Yes, they got fewer cable users, fewer internet users, and really the company wanted more internet users here because, as we all know, more and more people, when they watch shows, they're sort of watching them online rather than cable networks here. But as you say, mobile really is where a lot of content is going right now, and so it's been a big problem for Time Warner. They've got fewer internet subscribers than they basically forecast or Wall Street was expecting, so not really a good sign looking into the year.
They didn't lose as many video customers as expected, but it's getting pricier to hang on to those video customers, right?
Right. I mean, it comes down to a pure margin thing. You know, even if your pool is, you have set costs, and if you have fewer customers, your costs per customer go up.
And sports programming is so huge. I mean, they've just spent a ton of cash, don't know exactly how much yet, on the channel that they're going to form to carry the LA Dodgers, because obviously the sports is so lucrative, but it's so costly to carry it.
Yeah, sports is one of those things people will watch live, and if you're a cable provider, you realize you need content. You can't farm it out to the CNNs of the world.
All right, Ernie, thank you so much. I'm going to go back now to the Market Monitor, where I am remet by Conway. Come on back, Conway, because we're going to talk Apple suppliers and, of course, more mobile, because some chip makers here having big earnings. Qualcomm beat on earnings, raised its outlook, and Skyworks as well. Two of them, semiconductors and chips, benefiting from mobile.
You know, let's start with Qualcomm. It's all about dumb phones versus smartphones, right? And dumb phones are the old phones. And those phones are slowly being phased out in other markets like China and Latin America as those people look to get on the smartphones. So that is what where Qualcomm is benefiting. Now, if you take a look at Skyworks, their sales were strong, and they're also forecasting strong sales for the current quarter. You kind of scratch your head because some other Apple suppliers like Cirrus Logic and Broadcom did not. But you have to go deep down into the earnings, and then you will see that Skyworks also supplies chips to guess who? Samsung.
There you go.
Samsung Galaxy.
There you go.
That's what's making the difference for them.
Digging deep, that's what he does, Conway G. All right, Fusion IO. Now this is interesting because Apple co-founder Steve Wozniak is the chief scientist there, and it cut its 2013 forecast largely due to Apple and Facebook. They make up, what, more than 20% of their business.
Well, it kind of goes back to the Skyworks story. Everyone is looking at the suppliers of Apple to kind of gauge what's happening at Apple. And so we see here another sign of a supplier that's not seeing the kind of demand that they were seeing before, which suggests that demand may be slowing for Apple products.
All right, and of course they do flash memory to enhance service there, their business. All right, we're going to go to housing now because this is a great story. IPO, the first one in nearly a decade, Tri Pointe Homes. They IPO'd today, started trading, $17 was the price range. 1956 is where they opened, and this is the first IPO basically in about a decade for a housing company. Tell us why. Talk us through this.
You know, home is where the heart is, right? But apparently now home is where the cash is.
Oh, yeah.
Right? And during the downturn, nobody wanted to be near a housing stock. And if you take a look at the Home Builders Index, right?
Yeah.
The Home Builders Index has done extremely well, especially since the low point during the recession. It's now up 300%. And that's because people are buying homes. What? Mortgages are low.
Look at these numbers here. Home builders in the fourth quarter. We got a bunch of big ones here. Look at the new orders and the revenue. Boy,
and you
up,
know why?
up.
Why? Because mortgage rates are low.
Right.
The inventories are tight.
Yep.
And the prices are going up. Not only are prices for homes going up, but rental prices are going up. Right. So the CPI index showed rental prices up 2.2%. So some people are getting priced out of the rental market. They say, well, I might as well buy a house. But remember when I was here last, home prices in that sub 100,000 are going fast. And so people are saying, I got to get in, and I got to get in now, or I won't be able to find a house.
Great point. All right, Conway, thanks so much. Remember, folks, follow us on Twitter at Reuters Insider and check out more great videos at Reuters.com/ReutersTV. I'm Lisa Bernhard, and this is Reuters.